Hello guys, glad to have you on board again today. We're going to cover up this one pretty quickly as I have a lot of work to do today and I don't have much time to make that analysis today, so I'll stick to the technicals and the essential elements, even though there are lots of things to talk about today. First we'll have a look at the economic calendar because today is a big day. We've got FOMC down the road, so we're going to raise interest rate to 2% and the market is obviously going to watch out for one single thing, which is what we call the dot plot, in which basically all the FOMC members will put their odds toward 3, 4, 5, toward further interest rate raisings, and this is what the market will look like. Look forward for to see if things have changed in the FOMC members' minds. If we're still heading toward 3 or 4 during that year, and mostly how many to expect next year. The market is already forecasting what's to come next year. What's interesting to them is to know what is the interest rate raising path. How fast will we do it? So for now, in the latest months, the major question was either we'll have 3 or 4 raises during that year, but I think right now the market is already projecting toward next year and already forecasting if we'll have a raising interest rate in March or not. So this is what we'll have as a new information today, and the market will have a look at how many dots are put it to raise the interest rates in March next year. This is what the market will try to find out. If the market somehow understands that the Fed will raise in December and eventually as soon as March 2018, then that might not really please the market. So we'll see about that. Once again, there is the information, there is the way the information will be perceived by the market, and there will be actual trading strategy coming out of this. So this is free variables. You don't have any idea how this will react. So it really is something you cannot trade until it is on the charts. We'll see technical information on that video, of course. But first we'll get it started with the Bitcoin. And I have really dangerous things I need to talk to you about today. We're going to put this indicator. You basically search for BTC and you'll find this one, BTC USD longs versus BTC USD shorts, and you also have Bitfinex Bitcoin margin trader, which is important to have. So we have clearly a problem in here. The problem is pure and simple. We now have a lot more sellers. We are raising the amount of sellers in terms of volume versus buyers. Even though, yes, the market is going to the downside, but we're working around a support area right now. And remember, we have a very interesting and dense technical cluster in here with the mid-trend channel, horizontal supports. Big things are happening in here. It's a big zone to play. And yet what we have right now is a lot of sellers on the support, and more importantly, we've got heavy amount of margin traders, which is generally retail traders. So unexperimented traders are trading with leverage bearish. And the bearish volume demand is raising on a support. And this is not something I'd like to see. I warned you guys about that. I tell you, I don't want to see this happening. Otherwise, we might head toward major problems down the road. Because last time we've had that was back then. Okay, this is the last time we had heavy amount of bearish speculators with bearish leverage positions. The last time we had that, we built the bottom. And speculators, I mean real big money, smart money speculators, saw that distortion into pricings and they bought you out. It was pure technical rebounds, and the question I wonder right now is, what if they were about to do the exact same thing once again? You really don't want to see that happening if you are shorting right now, because you need to be aware of what you have in front of us. What we have in front of us right now is a price distortion. And regarding this, there are two possible answers. When you see this, I mean, look at this. This is where we bounced down. This is where we found the market top. Last time we had market distortion between bull and bearish. we have the exact opposite right now. So I only ask the question, what if we reverse? What will it look like? We're obviously going to have a V-bottom structure if that's the case. It means that we'll retrace and fuck up all the stop loss in the row. And this is an underlying risk. So once again, we're on a support area and we've got two options. Whether the support will hold and what's about to come later on will be nasty because we have lots of people anticipating the support to break down as it hasn't yet. So there's two options. The support is breaking down, then good for those who speculated. You've got nice returns. But I tend to feel like that market doesn't necessarily know where it wants to go, and that price distortion can be seen as an opportunity. Somebody who's got a lot of money, see lots of sellers, unexperienced trader shorting a support, they can say, okay, whatever, short it, I'll buy you out, and then I'll sell you those coins at higher pricing. Just what they've done back then. They bought you out and they sold you the shit at better prices. They can do the exact same thing right here. Buying you out and selling you the same shit at $2,000 higher. It really is that simple. So regarding this, I hardly suggest that those who have bearish leverage in the market right now can take heavy amount of risk, and you need, if you're respecting my strategy and if you kind of understood the mindset I'm always trading with, whenever you have risks, too much risk is a big danger you don't want to be into, which means right now too much risks for the sellers, which means you really have to lower the stop losses. I don't say you need to get out, absolutely not, because if the support managed to break down, then good for you. You're going to have nice gains and you don't want to lose those gains by getting out. But I think you need to manage the risk. If the market is trying any kind of pullback, you really need to secure those gains. And never ever return to negative return. It means if you sold right there, then really good for you. Put 50% stop loss in here to secure the gains and put the rest at break even. Okay? It really is a good strategy. If the market is somehow reversing brutally, then you'll have at least 50% of your gains in the bankroll, which is important. You took risks trading to the bear side. Losing that gain will be a mistake. So you really need to secure the gains you might have as a seller. It's really too early to consider entering bullish right now. Nothing like that can be suggested. It's not really my point right now. I'm not saying you need to buy. I gave you a cluster in here yesterday. We're working around that cluster for now. And as you can see, it's not working pretty well. We're trying to break it down. So we'll see how this goes. As you have a single candle closing below, it's not a problem. We can have the second one closing right above it. So this is not yet invalidated, and as I said, 15-minute signal. So we're going to get what's happening in 15-minute time frame. Do you see a bearish signal in here? I see nothing like that. All I see is a market that is going to find taking profit patterns in here, and whenever we'll have that pattern, you know what I'll do. I'll buy that market. So I'm sorry to tell you guys that, but I'm going to take speculative bullish entries, not to reverse long-term bullish. So don't make me say what I haven't said at all. I will just try a speculative scenario. For now, there's nothing to do. The market is going down. If we make multiple candle closes below that technical area, there's simply nothing to buy. It means the sellers are not getting out, and most likely that the speculators are not getting in. And if they are not, I don't want to be a buyer. The market's just falling apart, and that's good to me. But if I see taking profits in here, any return to resistances will be considered as a reversal to me. So for now, there's only one option. Either the market do this and fuck up all the supports and get to lower values than 6,000 in a row, and basically we'll have a bearish trend at play. Option number 2, market is stopping right here, reversing, fucking up all the stops of those who've been trading with leverage. And guess what? If we chase bearish guys stop loss, the market will go upward. Once again, not to say that the market is bullish long-term trendy and that we terminated a crash, just that we will rebound once again to fuck up the sellers. It's just that. Don't overestimate things. Don't overestimate the potential. We're going to zoom out and see what this potential could be. It really is that simple. Have a look at sine wave once again, trading your context. Okay? So we're going to remove those things, even though, as you can see, this is clearly dangerous price area right now. We really need to break down that support and not fail it, otherwise big problems. Yesterday was an oversold cluster. If today we're not making a candle closing at the low and below yesterday's low, I think the market will probably reverse one more time. I'll set things straight. What will be the context in here? We could very well have this. A, B, C, D, E. You've got original point, B point, and D point lining up. This is what we call barrier triangle. It's a bearish structure, means that we'll still go to the bearish side afterwards, but we might have one more pullback as an E point, generally retracing near the price area, joining the trend line A to C point. So we could very well have a pullback, yet the trend will still be bearish. It doesn't change anything, it's just how we will get to the targets. As you can see, we've got multiple resistances that we haven't pulled back to. We could very well do it. Lots of resistance in here, we can really well pull back those, find lots of sellers in here. Basically, those who might buy you right here will probably sell you the same shit right here. To those who will be ready to buy for a to-the-moon kind of pattern or whatever, but really be aware that that's bouncing up right here wouldn't be a bullish signal, just a speculative bullish signal like those who've been buying the dip right here. Just pure and simple. So as long as we're in that price area, as long as we don't reach out to the major levels, which are, let's say, $100 lower, I still see very dangerous potential to see speculators buying the dip once again, not to reverse the trend, just to fuck up those who are selling aggressively the support. And I maintain that, and it's really important to get that later today, we're going to make a live room record. So if you want to guys be live with me today, you're going to join me into Discord. So I'm going to put the link to join us right here. We got the tutorial video teaching you how this thing works, whatever. So you join us, and today at 5 p.m. EST plus 2, I guess, you get to join us into Discord. That's for free. You just get there and you can ask me questions in live and whatever. And today's topic is going to be market psychology. And we're going to talk about this, what we call the reverse psychology, when the market is doing something, not necessarily because it has to go that way, but just because the speculators are doing it the wrong way and the market was just wrong for them. This is what we call a standard reverse psychology pattern. And we could have one right here as unexperienced trader are shorting a support that might hold, and if that support is holding, then we're gonna do a bear squeezing, meaning we're gonna squeeze all the stop losses of those bears who've been speculating aggressively on a supporting price. So, as I said, and understand me well in here, it's really important you get the point to where I'm saying. What I'm saying, we're in the mid part of the trend channel. This is a support area as long as we don't make very clean candle close below that price. We made that yesterday, but be aware of one thing. Yesterday's candle was highlighted to be oversold. So we really need to make a new close below yesterday's low today to confirm the bearishness on that market. If somehow today we make a lower shadow candle, or even worse, we get to close higher than yesterday's high, then big troubles down the road, because we are probably going to fuck up the bears. Okay? So that's an underlying risk. You just need to adjust your portfolio to that risk. Just watch out. Today is going to be an interesting day. If we close at the low, then good for you. You can go bearish, means that the market, whenever it's oversold, is not bought. And if that's the case, then you don't want to be a buyer. You just want to be a seller. And in that case, that's pretty good. We're going to get to the lower boundaries of that trend channel, and we're going to get to a falling knife. And the targets could very well be 4,000s. So you really want to be in that move. But before entering right now, make sure the support is broken down, and that we hold a close today below yesterday's low. If we fail doing it, big danger, and you will have to adjust the portfolio regarding this. So that's today big tipping point, big tip I'm giving you. So be really aware that the fact that we have margin traders shorting the support before it has naturally broken is an underlying problem in the price structure and in the price psychology. And remember what I've been saying for months, trading a crash is most likely trading psychology more than trading anything else. You don't trade Elliott wave or whatever, you trade psychology. And right now we have a psychological problem within the investors. And we'll see how the market will react to those. Now moving on, I'm going to get quick on just talking about the scenarios I'm triggering today. GBP/USD is reaching out to the lower support in which I had conditional orders, so I just got triggered to bullish entries in here. So I just took the reinforcement that was planned already. You knew about that. So I'm bullish in here. Stop loss is set right here. No need to talk long about that. We already talked about that scenario. EURJPY is trying to work out that price area. Still speculative as long as we haven't broke a single support. So I'd like to see the price terminating and finding a bearish cycle in here. For now, we're still having that bullish pattern, but as you can see, sine wave is nearly terminating in bullish impulse. So if we fail in here, probably going to have a bearish cycle, and this is the one I would like to take if this one occurs. So I would like to have bearish reversal on sine wave with a bearish momentum and breaking down supports to trigger validations. So there you have validation to come upon the scenario on EURJPY. So once again, validation means that this is the point in which I'm ready to take first position reinforcements, not before. So in here, and until we get there, it's not possible to get into leverage trading, which means we have to remain into speculative leverage with a very large stop loss up here. So whenever I get to validation, I'll eventually consider lowering the stop loss, putting some more leverage, and whenever I get to stock break even is where I'll get to maximum leverage of that trade, not before. Sorry, I'm going to have to make it a lot faster. So this is what I've been doing today. AUDNZD is still waiting for the price to break that down and reach out to the entry areas I have right here. So these are the next scenarios that might be triggering the next following days. For now, I still think this thing is going lower. And today, the big thing is regarding the overall quarter we've been talking about for month. Today, it's either the volatility is crashing down and getting to 10, and at that point, we're clearly going to have a stupid market totally out of fundamentals. So this is option number one. Option number two, we go there making higher high, and we'll get to an increasing volatility scenario, probably going to reach out that price, or at least this one means that we might have a pullback in the equities. Not necessarily going to be a major pullback today. All I have is two technical clusters. First one is in here, 2730. So we'll have to watch out for that price. It's supported by that trend line as well. So we'll see if the market is taking this as a support area. So for those who might consider taking short entries right now, and it's totally according to the strategy, we've got double triangle in here confirmed by the momentum. So this is something you would like to trade bearish right now, but be aware that this is a taking profit pattern, so the stop loss has to be set pretty far. This is where I've been setting mine, 2841, 2840 for example. We've got another resistance in here. I'm ready to take in a reinforcement in here, but that's all. So this is bearish cluster in here to trade only upon signal. No signal, no trade. Otherwise, I think this is where we'll trigger. We should have a pullback in the equity pricings. And the question I have is whether we'll find support, bullish support in here or not. If we're breaking that down, then really good for the bears. We'll probably reach out to the second technical cluster in here, in which I think taking profit is absolutely necessary for the bears. Partial profit taking, I mean. So I'd say shorting in here, 25% taking profit in here to pay for the stop loss. Maybe another 25% layer in here just to pay for eventual reinforcements later on. And if the market is collapsing, then you're in as well. So that's no problem. Not possible to get into leverage trading until we built a support and broken down that support. So it really is a two-way scenario, a two-step scenario. First, you need to find the support either here or here probably. Or if the market is just falling apart, then no problem, let it go. But Before getting into leverage trading, you really need to find a temporary support, and breaking it down is the only option to get into confirming that trade and getting into leverage positions. Otherwise, have to remain speculative, very large stop loss, low leverage, and don't risk your entire capital on those trades. Today is going to be a big day. Tomorrow as well, as we have the ECB. So it's going to trigger scenarios on the entire quarter that we already know about, which is VIX, junk bonds, SPX, 10-year yields, gold. So I see gold on supports, trying to chase the bear stop loss once again, but failing it. Anytime we'll get a bullish reactivation back to the resistance, and this thing is going to explode. So this is still what I forecast: bearish scenarios on the SPX, bullish scenarios on the gold, bearish scenarios on 10-year yields. So we've got retracing in here. I think A wave is terminated. We've got B wave done. We should have one more pullback on the yields. So this is not something bullish for the equities. I see bearish equities, bearish yields, money moving out of equities into yields and into bond market, into gold, and probably into yen as well. This is why I am short on EURJPY, buying gold, short. I'm not shorting the 10-year yield, because I keep that trade only to the bullish side to eventually hedge my position out of SPX, because if somehow SPX had to go upward, then the yields will surge as well. And this, as said, I'm not going to trade equities to the bull side ever again. We're at the end of economic cycle. Buying equities is just pure shit. So I'm not buying this. Any equity is not going to be bought to me, or just a couple ones like General Electrics, that's all. But no buying any more equities, only selling them, and if I fail selling them, then I will buy yields, okay? So I will sell bonds to those who are ready to buy them out at that price, and this is simple. It is that simple to me. So it's either I'm right selling the equities, or I'm wrong, and in that case I will heavily selling bond market to hedge the positions and take gains because all I care is taking gains. I don't know where the gain will be. It's either going to be selling T-bonds or selling equities. I don't know what the market will choose, but it's obviously going to be one of the two. Clearly, Wall Street is forcing you to keep on equities and selling bonds, but if they're wrong, bonds are going to be bought heavily, brutally, and equity price will fall apart. So this is what I forecast. But once again, I'm trading against big guys in Wall Street, and they could very well try to fuck me up and chase my stop losses. And if that's the case, I'll take the gains into the bond market. Goodbye, guys. See you tomorrow.